Well, I want to transition to Sean Yesner with Yesner Law. Some news this week, and this kind of relates to people being able to qualify to buy too, because short sale sellers have kind of been in limbo since 2013 about what was going to happen with the deficient amount that they shorted the bank. And now I think go ahead and tell us kind of the new stuff that happened.
Yeah, so we had a law called the Mortgage Debt Relief Act, and what that law said is that if someone did a short sale or had a foreclosure sale on their primary residence and the bank forgave the debt, that they were potentially going to be taxed on that money that was forgiven. Now, the Mortgage Debt Relief Act said we are not going to include that deficiency as potential income. You can exclude that income on your tax return. The problem was that law went away December 31 of 2013. So all of 2014, we haven't known how to advise clients in terms of, is it coming back, is it not coming back, what's going to happen, is that deficiency taxable, is it not taxable? Well, about a month ago, the House of Representatives passed a bunch of tax extensions, including an extension of this law, and then the Senate just passed it last week. So for anyone who's done a short sale or lost a house maybe in foreclosure in 2014 and received a waiver of the deficiency, and it's been their primary residence, that income can probably be excluded from their 2014
And again, it depends.
returns.
It's got to be primary residence. I mean, there's a lot of factors. And I don't remember if Obama signed it or not yet. I think everyone said that he would.
I don't think he signed it yet. But
but it's pretty much a done deal.
So for the next 10 days, until the end of 2014, we have this law in place. So now we go right back to the uncertainty
to see if it'll get extended.
2015.
So anyone that's had that uncertainty at least has a thought. And this is something, because we talk a lot about short sales, because 4 and 5 years ago they were a lot more common than they are today. So how they're structured and what a consumer has to go through today is a lot different. I think the banks a lot more interested in reviewing everything in detail than they were a few years ago.
Yeah, they need to keep their documents completely filed. They're under a lot more scrutiny from the regulators and the FDIC and all those different types of organizations. We've come away from a lot of the strategic defaulters, the people that said, I'm going to go behind on my loan in order to qualify for a short sale. They've loosened up those regulations a lot as well.
And so speaking about, from a lending perspective on short sales, there were some changes a little earlier this year about waiting periods, right? Where it used to be a certain period of time, and they've changed that up a little bit. But still, people that did a short sale a few years ago, in many scenarios, can qualify, to get a home loan again, depending on
Yeah,
a lot of the different
there's a few differences. I mean, that's changed quite a bit. I mean, we just spoke about VA loans. VA loans have the least stringent waiting period, two years for VAs, 3 years for FHA, which means 3.5% down, and now it's 4 years for conventional mortgage, your Fannie Freddie.
And again, I think a lot of people that did a short sale in 2009 or 2010, 2011 even, because once we hit into 2015, they are probably not aware or thinking, oh man, I can't qualify. We had a closing last week where they did a short sale. They did a short sale I think in 2010, and then got their stuff together. Now that their credit score is good,
reestablish your credit, you
ready to go.
Yeah.
So don't think just because you had a short sale or a traumatic event, a few years ago, that you're completely out of the ball game. You may still have a chance to sell or to purchase a property after having done a short sale and qualify.